What's up, guys? Jonathan Rose, owner, Masters in Trading. Unusual options activity. By far, from what I found, the most powerful tool any trader can use. Unusual options activity. It allows you to see what the institutions are doing, what the hedge funds are doing. Before I get into this video, this coming Tuesday, I'm holding a live webinar to show you the power of unusual options activity. In the video description, I'll leave a link for you to sign up. It's absolutely free. My number one objective is to make sure that I don't waste a moment of your time. So come, it's this Tuesday again, links in the description. Let's get into the video, unusual options activity. All right, guys, if you haven't yet, subscribe to the channel. We have a bunch of unusual options activity content, a bunch of content on stock options and futures. Today, we're going to be looking at LCI Industries. Last trade, 113.19. I have you on a weekly going back to 2015. Here's the stock's behavior. But we're not as concerned with the stock's behavior as we are with the options. So LCII, last trade, 113. Today's volume, 150,000. 150,000 shares of the underlying were traded. So right here, 345 options. One option equals 100 shares of stock once that option is in the money at expiration. So 345 of these calls is the equivalent to 34,500 shares. So this is a pretty big order, right? 34,500 shares. That's a good chunk of the overall volume. That's pretty unusual, right? Close. Kinda, maybe, but it gets even better because look at this trade. 2,000 calls went through today. 2,111 calls went through on the 125 strike, April 2020. So let's summarize. Somebody bought 2,111 upside calls. The stock's at 113. These are 125. This position is like buying stock at 125. Why would anybody buy stock at 125 when it's trading at 113? Well, you get massive leverage. If the stock gets in the money over 125 in 85 days, the person who bought these is going to be long 2,000 times 100. So they're going to be long 200,000 shares of stock. 200,000 shares of stock. This one order is bigger than the overall volume for that given day. Now, if you had a position in LCII, if this was a stock that you followed closely, is this information that you'd want to know, that you'd want to understand? Because right now you're thinking, well, how do I know if it's selling calls or buying calls? How do I know if it's a bullish trade or if it's a bearish trade? Let me take you down to time and sales. If I take you down to time and sales, you'll see today's biggest trade, April 20th, it's these, right? 1,952, and it seems somebody else kind of jumped on their trade, probably a smart bet. The way that I see it, and I was a market maker on the floor of the Chicago Board Options Exchange, 150,000 shares traded today in LCII. This person decided to do a trade that was bigger than the overall volume. The reason they went into the options market is because the options market could absorb this kind of volume. The equity market, no shot. It's double the overall volume of the entire day. That's why it's important to follow unusual options activity. Join me on the webinar. It's this Tuesday. I'm not done. I'm going to continue explaining this, but do me a favor right now. If you like this video, give it a thumbs up, subscribe. Let's move on because I want to show you one more tip about LCII, and that's the timestamp. 11:24, I'm on Central Time. At 11:24 a.m., these calls traded. How do I know if they were buying or selling? Let me show you. LCII. Now I have you on a 1-minute chart because I want to look at the intraday activity, Thursday's activity. That trade was done at 11:24. At 11:24, that's going to take us right about here. After the trade went through, the stock went from $110, rallied straight up to 113 where it stayed for the rest of the day. These, without a doubt, and why do I say it with certainty? I say it with certainty because if I was a market maker in this stock, I'd be raising my levels because this institution or this hedge fund is absolutely buying. I'd be raising my volatility levels and I'd be raising my expected price levels. So I say that with comfort. That's how you price options. The reason the stock went higher is not because everybody chased this order and thought, wow, if somebody's buying 200,000 shares, they must be really smart. We all got to jump on the train. That's not the reason. The reason is because they bought the calls. So the market makers sold the calls. When you sell calls, it's bearish, right? So you're short deltas. Being short a delta is just like being short stock. So when the market makers sold calls, they got short deltas. So what did they have to do in order to get long deltas? Or what did they have to do to get long stock to hedge themselves? They got to buy the crap out of the market. And it went up so fast because they realized this crazy person did 2,000, which is more than the overall volume for the day. This is powerful, guys. Tuesday, I'm going to walk you through it. It'll be a really cool webinar. I'll stay on, answer your questions for as long as necessary. My name's Jonathan Rose, and I'm the owner of Masters in Trading.